Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news China's having a tough time shaking off its housing blues. However, in the week ahead, the RBNZ's MPS and OCR interest rate decisions will attract international focus on Wednesday afternoon. Of course, locally, it'll be the key focus of this week. But today we start first in China. They released official data that showed foreign direct investment in January was down more than 11% from the same month a year ago. That's their largest retreat since the GFC. And the more recent data is even worse, falling more than 20% from December. It wasn't the only retreat released in official data in China. Their new house prices fell the most in a year in January, with prices in 60 of their 70 largest cities retreating. For resales, the official data showed only 2 of the 70 cities in their survey with a month-on-month gain, none with a year-on-year gain. For such pervasive declining prices to show up in official data probably means the situation is much worse, and it is now quite difficult to sell a house there. Buyers have vanished, unwilling to buy a depreciating property. And it is notable that China does not release official sales data volume. EU inflation expectations are essentially holding at 3.3% for the next 12 months. The ECB would have been disappointed in that, and the fact that the last mile is proving very sticky. However, it is not alone in having that problem. In Australia, Rio Tinto has given a go-ahead for a big new iron ore mine, but it is in West Africa. The iron ore price has been held relatively high recently, encouraging miners, and Rio Tinto's decision is just one of many. But the accumulation worries some. Iron ore prices are not factoring in the wave of new supply, leaving it vulnerable to the same collapse that smashed battery metals like nickel. If that would happen to iron ore, it would rock Australia. The US Treasury 10-year yield starts today at 4.25% and down 1 basis point from Saturday and down 5 basis points in a week. And the price of gold will start today down $3 at just on $2,035 an ounce, but that's up $25 from a week ago. Oil prices are still lower at just on $76.50 a barrel in the US, while the international Brent price is down to just on $81 a barrel. And the Kiwi dollar starts today little changed at 62 US cents, but it is up more than 3/4 cent from a week ago. Against the Aussie, we've settled back to 94.4 Australian cents. Against the euro, we're slightly firmer at 57.3 euro cents. That all means our trade weighted index starts today at just under 71.4, and that is 60 basis points higher than a week ago. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again